allowing and approving more of these specific work authorizations than previously during this wave of asylum seekers. There isn't quite a one-to-one because obviously there's the numbers of apprehensions and encounters at the border. We know how many folks have been bussed up from Texas to New York City to Chicago to Denver, but then those folks might pass through New York and go to another city. And so there are estimates. We certainly know that there are hundreds of thousands of these folks seeking asylum and trying to apply for work. Whether or not their asylum claim will be approved but that could take a number of years because of these backlogs. So in the meantime, they're trying to work, and a lot of
while they're waiting for approval, they do get work permits
if they go through the correct process and avenue. When they don't, that floods the underground work avenues such as like construction with day labor. That sets them up for work for being abused and not getting their pay for labor violations. So putting them on
and
top,
not putting tax dollars back in, right?
Right,
yeah.
But we do know that when undocumented migrants do work and do have above the table work, that they give, I think, the tens of billions of dollars back to the economy because they're not allowed to take out for all the Social Security benefits.
Well, and we're running out of time, but you also get into that for a lot of cities, they are looking to do this so that obviously they provide assistance, they provide housing, but getting them off in terms of finding jobs makes it a little bit easier for some of the municipalities, right, that are involved. Just quickly.
It does. So their thinking is that once they help them get an apartment, then once these folks can get work, then they can start paying for their own apartments, and then they no longer have to pay that. The city of Denver estimated that they put shelters about $90 a day per person.
Yeah.
Getting a family in there helps them get off of that thread.
Well, you can read all about it at Bloomberg.com. Ella Cerrone, she's Bloomberg News equality reporter, joining us right here in studio. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until the closing bell clangs, and we have got the Dow, the S&P, NASDAQ 100 index all in the green. It is a down day for the Russell 2000 index. That index down now by 0.3%. Right to the numbers with the S&P up 20 points now, higher by 0.4%. The Dow, it's been swinging between gains and losses. Right now we're higher by 15, up by less than 0.1%. NASDAQ up 55, a gain of 0.3%. 10-year yield 3.94% with a 2-year 4.05%. Spot gold little changed, up $1 the ounce to $24.28. West Texas Intermediate crude oil up 0.9%, 76.86 per barrel of WTI. Bitcoin up another 1.5% today on top of yesterday's surge. Bitcoin now at 60,445. Well, there is lots of speculation about the September rate cut and the September Fed meeting. Could it possibly be a 50 basis point cut? Erica Mashmeyer is portfolio manager at Columbia Threadneedle.
I don't think that we need a 50 basis point cut. And frankly, I think it's low probability. And I think if that happened, it would be more likely to spook the market from a macro perspective, right? The Fed only does that when you have something really, really wrong. And so I think that would be a sign that the economy is broken, which I just don't think that it is. We haven't gotten that sign.
Erica Mashmeyer was interviewed this morning on Bloomberg Intelligence. Cisco cutting thousands of jobs in a second round of layoffs this year. This according to Reuters, which cites sources. Cisco shares right now down by about 0.6%. And keeping track of Sweetgreen, the salad chain, after earnings, up now by 29.8%. Recapping, stocks higher. For now, S&P up 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet there with an update on the Friday trade. Well, interesting trade today for shares of Pagaya Technologies. Shares soared as much as 19% in the pre-market before we got going. They've bounced around in the regular trade. They're down 10% at their lows, up nearly 8% at their highs. The financial technology company gave a quarterly outlook this morning, raised its full-year outlook, and also announced a forward flow deal for up to $1 billion of loans with Castle Lake. We want to get into that. Shares of the $1 billion market cap company are down about 14% year to date. Joining us right now is the co-founder and CEO of the company. He is Gal Krubner. He is here in our Bloomberg Interactive Broker studio. I'm not saying it right. You say it.
I said Gal Krubner.
Yes.
But you can say it, yeah.
But that was very good.
Well, thank you very much. Hey, you have a fascinating business that you work with lenders like U.S. Bank, and that's not the fascinating part. Klarna is what is fascinating to me, because you help sort of you help these buy now, pay later, this really popular new system to thrive. Tell us how you do it. What's the relationship, the partnership look like?
Perfect. So maybe let's take a step back and let's describe Pagaya in a second. So yeah. Pagaya is a fintech company that is helping lenders, exactly as you said, the U.S. banks, the LA Bank, and up until the Klarna, and actually SoFi too, that I'm sure you're familiar with.
Yes, of course, SoFi, yeah.
And we are using artificial intelligence in order to help them to approve many more customers. Now, with these lenders, through these lenders, we have already provided over $21 billion of loans, and we served over 2 million customers. And the way it works is very simple. Someone is coming to one of these services to ask for a loan, and for some whatever reason, the first provider could not provide the loan. We are getting all the information of the customer at that point, and for many of them that are actually very good consumers, we are providing with our technology the ability to extend the loan.
Even with the Klarna? So if I go and buy something, say on, like, I don't know, RalphLauren.com, and it's $100, I say I can make 4 payments of $25 each. They shop that to another lender who says no, and then they come to you and you say,
so what's happening is, like, Klarna is looking if they could provide that credit, and for whatever reason they can't, they're saying, hey, Pagaya, what about you? And we're looking into that, and we say, you know what, that customer is actually a very strong customer. We should definitely give him the loan. And then we are providing him the loan.
But wait, why does the first lender say no then?
Because there are very different ways that banks looking on things. They have a different regulatory regime. So for example, the FICO cutout, which is a very important to the way of how it's sits on their balance
The
sheet
FICO score.
could be
Right.
very limiting factor for their ability to lend. Now, because we are doing it together with capital markets and we have very big institutional investors behind us that are a little bit less relevant for that regulatory regime, so they have the ability to actually approve even if the FICO, let's assume, is below 720. So we are filling a very important gap in the United States ecosystem today, where banks, for regulatory pressure, needing to cut their lending for different type of borrowers. And then we are coming in and filling that in with the power of AI.
So who takes the loan on their balance sheet?
So the balance sheet piece is the very interesting piece. We have behind us 116 funding partners that has been funding these loans for the past 7 years. And they are utilizing our technology or the vetting that Pagaya technology is doing
Right.
for these customers, but they are the one who are providing the capital at the end.
Are these loans getting cut up into kind of like tranches, if you will, and different
Yes,
risk
so-
levels so that no one financial, whether
Correct,
it's
correct.
Visa, whether it's SoFi, whether it's Ally,
Correct.
it has the exposure of maybe the riskier part of the
So
portfolio?
there is a pools that are being aggregated in between the different loans that we are originating through SoFi, through Lending Club, through US Bank, Klarna, and all the names we just described. And then an investor, when they just want to get, an exposure to the consumer credit in the United States.
Mm-hmm.
And then they are buying that pool of loans with the different type of loans from the different type of lenders,
Right.
but all of that being priced by the Pagaya technology.
So you use the technology on that end.
Correct. So the way the loans are being priced is being governed by technology, and that's the AI piece that has created in Pagaya, but being embedded in each and every part of the different lenders we work with.
So you basically help filter through the people who are
Correct.
looking for, the consumer
Correct.
who's looking for different loans,
Correct.
right? And then it gets kind of,
Correct.
But you use the AI
Turn
to do
around.
the pricing. So
Yeah.
who wrote the technology?
So the technology has been developed in Pagaya. It's proprietary technology. It's one of the things we are the most
does
proud of.
Pagaya mean something?
So Pagaya actually in Portuguese means to pay.
Thank you.
So definitely there are things behind
Pagar.
that, Pagaya. But the interesting piece about the technology is that we have developed that, like over 250 very smart engineers that are working day in, day out, only about trying to get the best algorithm to be able to predict the behavior of someone to be able to pay. And the beauty of it, allow me another second, is that let's assume that these people are actually the ones who are being rejected from the bank, as we had in that conversation in the beginning.
Right.
But the reality is that their performance is not worse. Is actually in sometimes better.
What do you mean? Whose performance?
The
payer.
performance of the payers.
So that's what I was going to ask you. Do you have any statistics on default
So the
rates?
statistics on the default rates is that, like, what we have been seeing in the last year or more or less, since the really heavy inflation started to reduce, is that people are paying back their debt. And when we are looking on the delinquencies that are now versus what it used to be a year or 2 years ago, it's down 50% in their peaks. So it means two things. Number one, the technology is working and working well. And number two, it means that although we see some softening, and we saw that in many earnings on Airbnb and others, that the consumer is starting to spend a little bit less,
Right.
but the consumer is not paying back their debt less.
But are you upping your metrics, and are the lenders getting pickier about who they're giving money to?
So the lenders in generality has been much more picky to
Which
the
is
people,
maybe why there's
which
the
is
default,
part of the
right.
things that
Yeah.
the level of population that is now getting a loan are a population that
So-
actually could afford it.
So then there are still people who would like to get a loan who can't get a loan.
100%, and this is the biggest thing that we are trying to solve. As we are coming to these lenders, we are trying to help them increase as much as possible
Yeah.
to the people that actually should definitely get a loan.
Right, but you don't want to loan money to someone who isn't going to pay it back.
100%.
And you don't want to increase debt on somebody who's not financially responsible.
Right.
Correct.
That would be a disservice to the consumer. I wonder what an interest rate cut would mean to you. I mean, if the Fed cuts 50 basis points September 18th, does that mean anything for your business?
Definitely it does. So I think with the rates that will start to hopefully go down, and you spoke about the September, but maybe the September is only a start of something that could be a little bit bigger, right?
Yeah.
But let's look on it more on a year over year. Let's assume a year next year, a year from today, rates are going to be 1 or 1.5% lower. That is directly going to the pockets of the people. So the ability for that to means that investors will require 1.5% less return, and therefore they will charge the consumers 1.5% less. So more money is staying in the pocket of the consumers.
Always good. You must see so much data. What's the average rate on these loans?
So the average rate.
Or what's the range?
So the range, let's talk about the range, could be in between a 12 to a 20%, and in a context that's always shy from the credit card rates of the 23, 25, etc., right? So we are talking about lower rates, which usually are a better way to have that debt rather than using your credit card. So why people like so much the buy now,
That
pay
20%
later?
is pretty rough.
It's still
No,
rough,
it's better than
but
credit cards.
better than
Yeah.
credit cards. It's
Right?
everything
You're
relative.
looking at mortgages at 7 or 8,
Which is
auto
already high.
loans at 11 or 12,
Yeah.
Exactly.
credit
But
cards
you're
at
saying
24,
some of the loans that
25.
they give
Exactly.
can go up to 20%.
Up to 20%, but you have lower. You have a 12, and you have a 14, and you have others.
What's the majority of loans? And just got about 15 seconds.
The
terms of the rate?
majority of loan in terms of?
In terms of rates.
So 15, 16, that's
Yeah.
the numbers. And if you think about it, a lot of it is that consolidation. A lot of it is some relief to the consumer that like maybe have too much debt on his credit card at a 25% that
Right.
he's trying to
And
reduce.
so he goes to SoFi, he
Yeah.
consolidates
SoFi,
his debt. Yeah.
consolidate. And in some places where SoFi cannot give him the loan,
Yeah.
the guy is behind SoFi making sure it's going to work.
Very cool stuff. Gal, thank you so much. Really appreciate it. Gal Krubner, he is co-founder and CEO of Pagaya Technologies, joining us here on Bloomberg Business Week. Did I get it right?
Absolutely.
Did I?
I thought it was good, but it's his name.
Well, that's what I'm checking. All right, everybody, we're getting closer to wrapping up the trading week. We're going to get to that in just a moment. First up, though, back to World and National News and Amy Morris. Amy, all yours.
Thank you, Carol. A California man with a history of political violence has been sentenced to 20 years in prison for repeatedly attacking police with flagpoles and other makeshift weapons during the January 6th riot on Capitol Hill. David Nicholas Dempsey's sentence is among the longest among hundreds of Capitol riot prosecutions. Prosecutors described him as one of the most violent members of the mob of former President Donald Trump supporters who attacked the Capitol. Russia declared a federal-level emergency in the Kursk region following a large-scale incursion from Ukraine. It sent reinforcements there today, 4 days after hundreds of troops from Ukraine poured across the border in what appeared to be Kyiv's biggest attack on Russian soil since the war started. The U.S., along with Qatar and Egypt, are calling for a new round of ceasefire talks between Israel and Hamas on Thursday. We get more from Bloomberg's Jomana Bersecci in Dubai.
Very strongly worded statement saying it is time immediately to put an end to the long-standing suffering of the people of the Gaza Strip, as well as the hostages and their families. It is time to finalize a ceasefire agreement and release the hostages and detainees. They also add that it is only the details of carrying out a ceasefire that remain to be negotiated.
Bloomberg's Jomana Bersecci. President Biden also lifted a ban on the sale of offensive weapons to Saudi Arabia. That removes limits that the president had imposed early in his administration to pressure Riyadh to wind down its war against Houthi rebels. The Summer Games in Paris wrapping up this weekend. The U.S. now has 108 medals. China has 78. France has 56. China has the most gold with 32. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all advancing. Russell 2000, however, is in the red. 20 minutes to go before the closing bell. Let's head right over to the first word breaking news test for today's afternoon call. Here he is, our friend Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks are posting modest gains right now, with the Dow currently up 32 points. S&Ps are higher by 24, while the NASDAQ rises by 0.5%. The U.S. 10-year yield at 3.95%. Gold is little changed. Oil trading in the green. And Bitcoin, that's climbing by 1.5%. Among the main 11 S&P sectors, leaders were tech and real estate. Only industrials and materials were in the red. And leaders to the upside in the Dow, American Express and Apple, while Intel fell 3.8% and led to the downside. After earnings, Akamai rose 11%. And in the tech space, Reuters reported that Cisco is going to lay off thousands in a second round of job cuts. In other news, Beyond Meat soared 42% intraday before pairing gains. And wrapping things up, Palantir traded to its highest level since 2021. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It drives me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we got about 19 minutes left in today's trading session here on this Friday. Yeah.
Can't come fast enough.
I know. You make me feel so warm and fuzzy when you say that.
I mean, I love being here with you. I absolutely have enjoyed the hell out of this week.
It's been a long day, though, for you. A long week.
It's every day's a long day, and I just got a message from my mom that says maybe I have to be the nanny for my brother's kid tonight, so.
This has not been your day today, I'm just going to say. Well, let's hope Mom gets in. Right now, though, we do want to talk a little bit about the trade, wrap up the week. With us is Miguel Sosa, Head of Market Research and Strategy over at Blue Rock. They've got $18 billion in assets under management, joining us from San Diego, California. Do you have tornado warnings by you right now? Because we do by us.
Carol, no, we're in the clear for now. Thank goodness.
San Diego's going to be okay.
San Diego's going to be okay.
And the market looks like it's going to be okay, right? I mean, the market looks, I keep thinking we freaked out because of a carry trade that was maybe bigger than anyone expected, and it looked like it was going to get unwound too quick, plus a weaker labor market that maybe was weaker than we didn't expect. Weaker than we expected, sorry. Now those things have, to some extent, cleared out, right? And we've gotten this big correction, and earnings look great. So doesn't it make sense that we end the week in the green?
Yes, I think that's correct. So specifically for us, I think it's been an eventful July, as you alluded to. Both inflation is down and unemployment is starting to moderate in the sense that it's starting to tick up. So the Fed is recognizing its dual mandate and bringing down inflation, as well as not tipping the economy over into a recession. So yes, I think there's a lot to look forward to and hopes and prospects here for a soft landing.
All right. Well, so having said that, after going through a week like we have, and things certainly feel a lot calmer this week, or today, I should say, but we're getting ready for a week where we get, more reads on the economy, inflation prints, and so on. Anything that you've changed dramatically in your strategy or with some of your clients?
So for us, what we've seen is really what was impacted our firm the most is given our relative focus into private real estate has been the pivot around the communication around the Fed fund rate. And so if you think back even a month ago, it was still a higher for longer message that was being communicated by the Fed. The inflation print for June came out, around July 11th. Publicly traded REITs rallied given that we had hit the 3.0 mark for inflation. And so that's when the market started to interpret a higher likelihood for Fed rate cuts. this year versus potentially tipping over into next year. And for us, that's relevant because interest rates are related to what's known as real estate cap rates, which are influenced by interest rates. So as cap rates go up, valuations within real estate go down, similar to how bonds work with interest rate. And so what we're seeing is steadier or more stabilized cap rate environment, which should put a bottom to the private real estate drawdown that we've experienced in the last 2 years.
I mean, you're obviously not day trading private credit or private real estate. And yet I imagine the volatility in rates must be a little bit troublesome to you. How do you deal with these kind of, 10, 20, 30 basis point swings in 2-year yields?
Yes, so recently in the last week or so, it has been a little bit of a wilder ride, but it doesn't, to your point, Matt, it doesn't really affect us in our long-term conviction in our strategies, whether it's private credit or private real estate. What matters more is the tendency over, say, a given quarter. And so in our view, it's more so, in other words, the expectation of where interest rates will be 6 months from now to 18 months from now, and what the market expectations are for those interest rates, because it influences, for example, the value of any private credit that we may hold, or it signifies a benefit or a headwind for refinancing private real estate that we may hold. So in our view, that higher for longer has been much more attenuated. And so despite the volatility that we've seen in the short-term basis, we're optimistic that overall it's going to be a more moderate interest rate environment, which should provide a gentle boost behind us, or a moderate tailwind for private real estate investors.
I imagine that you're in the better areas of real estate. So medical offices, student housing, the good stuff, as they say. What do the prices look like these days? Because in commercial real estate, for a long time, and I guess still, there's a big gap between the bid and the ask.
Yes, that's right. And exactly. We like the sectors that continue to have low vacancy rates and significant growth of what's known as net operating income. And so we like the specialty sector, which includes some of those sectors that you mentioned: life sciences, real estate, medical office, student housing, single family rental. We also like, more importantly, the industrial sector that continues to be a very robust sector, very low vacancy rates. When leases expire and are re-signed, they are re-signed at significantly higher rates than they were previously. And we like the multifamily sector as well. What's curious about the current environment, call it the last 2 years, is that the income that real estate is generating is up significantly. It's growing faster than it has in the long term, but valuations are still down. And so, in other words, for a given property, say an industrial warehouse, it's generating more income than it was generating 4 years ago, but the valuation is down 10 to 15%, maybe a little bit more, really dependent on the quality and the location. So it's presenting this attractive buy opportunity, because now that we have more clarity on where interest rates are going to go, then we have a stronger expectation, a higher conviction that valuations will start to move upwards.
Hey, listen, just got 40 seconds left here. So maybe clarity in terms of valuations, but what about clarity in terms of the economy, or clarity in terms of interest rates, excuse me. But what about clarity in terms of whether or not we see a more significant, potentially economic slowdown? And just got about 30 seconds.
Yes, sure. So briefly, that's always a risk, right? And I think the Fed is still navigating the soft landing. I think the next months will be key. In September, strong expectation that there'll be a rate cut. The market has already assimilated some of the information, has moderated some of the anxiety that it had over the first part of this week. So we think there's higher likelihood that we will stick the landing, as they say in the Olympics.
Anyway, you still got to go to the doctor. Kid in college still has to have a dorm, right? You still need the data center open for your phone.
And a lot of colleges need off-campus housing. Miguel Sosa, thank you so much. Head of Market Research and Strategy at Blue Rock, joining us on Friday.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stellantis, the owner of the Jeep and Ram brands, plans to eliminate as many as 2,450 hourly positions at a pickup truck factory located near Detroit. The automaker says the cuts accompany its decision to end output later this year of its Ram 1500 classic truck model at the plant. As a result, it says the facility will move from 2 shifts to 1 shift. Cisco will eliminate thousands of jobs in a second round of layoffs this year. That, according to Reuters, citing sources. The number of people affected could be similar or slightly higher than the 4,000 employees that Cisco laid off in February. Dan Ives is with Wedbush Securities. He was interviewed earlier today on Bloomberg Intelligence.
Look, I mean, they continue to have struggles, similar to what we see with Intel. And I think you're really seeing almost a have and a have-nots in tech. And I think Cisco's struggling. And this just speaks to some of the I think, issues they're going to have. But look, you cannot cut your way to growth. And that's going to be the issue for Cisco going forward.
Dan Ives of Wedbush, and Cisco shares, they are down today. On an update for the rest of the market, we do have Cisco shares trading lower by 0.9%. An outperformer today, Sweetgreen shares, they are surging after the salad chain posted sales that outpaced market expectations. It also raised its outlook for the full year. Shares of Sweetgreen, they're up now by 31.6%. Expedia Group posted better than expected second quarter results while warning of softening travel demand in the current quarter. Expedia shares up now by 10.3%. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, just about 4.5 minutes left to go in today's trading session. We are getting ready to wrap up the day and the week. How does that feel?
Yeah, well, I feel like
What?
for me, it's just going to continue to head on into the weekend.
What does that mean?
No, it's good. It's good. We've dealt with a lot this week, and really the last 2 weeks. We've dealt with a carry trade. We've dealt with the labor market. We've dealt with earnings, and on the whole, I'd say it's a positive. I'm glass half full. I'm glass half full right now. I'm just not sure if I'm going to be able to walk on my own 2 feet out of this office.
Really? Well, you've been like double duty all week, like early. I did it today, and I can't wait to go home and take a nap. Can I just put that out there? I was up at like 4 a.m. this morning.
Yeah, that's how it goes.
All right. Having said that, I'm looking at
There's a lot of fascinating stories. You gotta put.
What?
I mean, so many stock stories. Well, you're talking about Expedia, for example.
Yeah.
Up 10%, even though the concern all week, the one bad part, the one negative takeaway from earnings is that the consumer isn't really traveling or isn't traveling as much as the market would like. Not booking hotel rooms, not booking the flights, not going to Disney World.
Airlines, Disney, and that's not all just this week, but like over the last couple of weeks, right? This tone, if you will, that the consumer is slowing down. And yet, having said that, we'll get retail sales next week, so we'll get an idea of that. And consumer spending hasn't been coming, it hasn't fallen apart.
The thing
completely.
is, a lot of it's like Disney, where we react as though fewer people are going. In fact, traffic is up 2% at Disney World parks. Well, Disney World, Disneyland, Euro Disney, etc.
Are people just not spending as much?
But no, we were just hoping it was more growth, right? We need more. 2% isn't enough.
You can't always just keep on spending. And I think this goes back to, there's a great story in the Bloomberg that just talks about, during the pandemic, we had all these, in a lot of ways, people were doing the subscription services and just like, okay, I'm going to buy this, but just sign me up for the, every month or
exactly.
Or
well, it's been that way ever since the cord cutting, right? You used to pay $80 a month,
not just streaming, but
for cable, and then you signed up to like
blades.
7 different streaming service. Oh, everything is a subscription now. I mean, not just razor blades. If a lot of car makers now, when they sell you a vehicle, they want to charge you a monthly fee for using the in-car navigation system. Or for heated seats. BMW wanted to charge a fee for heated seats. Yeah.
That is cray. All right, to be continued right now over to your TV colleagues. The closing bell starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, here to help take you through the Closing Bell, a global simulcast. It starts right now. Carol Massar and Matt Miller joining us from the radio booth as we welcome our audiences across all of our Bloomberg platforms. That includes, Carol, our partnership with YouTube.
Yeah.
Quite an interesting end to quite a wild week.
Very unexpected, not exactly how I expected it to play out. I gotta say, I'm exhausted in terms of the moves, the swings, the changes in the think, the emergency feel and panic feel on Monday, and it's kind of super mellow today.
I have always told new broadcasters, don't say the market's boring. You got to sell this product. But Romaine, it is not an interesting end. I mean, we're mildly up and we were mildly down this morning. Today is like the calmest day that we've had since last week.
Also, Carol, are you just tired because this is like hour 5 of you guys broadcasting together at this moment for today? But to that point, I mean, volume is really, really light, so you have to wonder if today everyone just put on their positions and just didn't want to take on massive amount of risk into the weekend, and then let's see sort of how futures open on Sunday, and then when you finally have the funds coming in on Monday morning in the cash market, what really transpires.
Yeah, and of course you have a lot of catalysts next week that could actually move this market as well. We've been talking a lot on the TV side, guys, about the economic data next week, as well as a couple of key earnings reports, including out of Walmart, which should maybe give us some insights into the health of consumer spending, amongst other things, as well as we close out this week here, as we get the closing bells here in New York. Green for some of the major indices here after, like I said, what had been an incredibly wild week. We talk about a gain in the Dow Jones Industrial Average for the day, up about 0.1%, or roughly 50 points. Takes a while for these numbers to settle. The Dow's still going to close lower on a weekly basis. The NASDAQ Composite is up by about 0.5% here on the day, is going to close lower on the week. And the S&P 500, 0.5% gain here on the day. And we were just joking, Alex and I here, that despite all the volatility, the S&P is unchanged on a weekly basis. So basically all that volatility, all that hand rigging was for naught. The Russell 2000, as you can see there on the screen, down on the day by about 0.2%.
Yeah, I'm looking at the best performing names in the S&P 500 for the week overall. Axon Enterprise, the outperformer, up almost 25% on the week. Super Micro, though, at the bottom of the pack, guys, down about 18.5%.
All right, let's take a look at IMAP here. It gives you a nice sort of sense of where sentiment is. All you have to worry about is if there's more red or more green, and there's more green. There's some pockets of red in there too, but no surprise, it's communication services and information technology that are kind of leading the way higher here. Communication services up by 1%, Carol.
All right, let's get to some of the individual gainers, and I'm going to go to Trade Desk, which was, we saw it really an outperformer in the major indexes today, up about 33% here. Oh, wait, sorry, let me go back to Trade Desk. Sorry, I was on Sweet Green. I kind of jumped the gun.
I thought so.
She's hungry. That's what that is.
I am. Trade Desk, forgive me, up 12.5%. This was an outperformer in the major indices. Advertising technology company, folks, reported second quarter results, beat expectations, also gave an outlook that is ahead of the analyst consensus. Not a name we talk about, but this
such
is
a key, dude, when we're talking about Warner Brothers, when we're talking about Paramount, when we're talking about Netflix, this is a key name.
All right, dude. Thank you so much. Yeah, but it's not a name that comes up often. Expedia Group, I don't know how much you folks have been talking about it, but it's really interesting to see a lot of players in the travel space, Airbnb and others, some of the airline companies over the last couple of weeks, kind of talking about softening sentiment. And then Expedia saying the same thing. We were talking about it last night after the close. And yet, nonetheless, this one really an outperformer in today's session, up about 10% here at the close. And then now to the winner, the one that was up.
Sweet Green.
Up more than 30%. Alex was breaking it down last night, finishing up 33%. The company posted sales that outpaced market expectations, raised its outlook for the full year. So this one definitely easily an outperformer, although you said, what, only up about 20% from its IPO.
From its IPO. This 33% gain means that if you bought the stock at the IPO in 2021, you're finally in the money. All right, in terms of the losers today, Insulet shares are the biggest losers on the S&P, falling the most in more than 2 years. The company makes insulin delivery systems, and they expect a less steep ramp of new customers in the second half. I would have previously said, why? We're all going to get diabetes with our diets, but now there are GLP-1s, so maybe we won't. Intel is a big loser, and it has been a big loser for a long time now, but it's made worse yesterday after we all left this office. Moody's came out with a downgrade to their senior unsecured debt. Moody's says it reflects their expectations for Intel's weaker profitability over the next year and a half, higher costs related to product manufacturing, unfavorable product mix, a weaker than expected demand in nearly all of its product segments, and continued market share loss. So not a great note out from Moody's on Intel. Finally, Gilead shares after the biopharma company said it had mixed results, or actually analysts said they had mixed results, but they did have solid tumor oncology a business there, so at least they're doing a good job in continuing to fight cancer, but they do face commercial and developmental challenges, so Gilead, one of the biggest losers on the S&P as well.
All right, guys, I'm taking a look at the bond market here because it's kind of, if you went back a week, you wouldn't have seen the turmoil that evolved this week in the bond market, but it's pretty solid. You got 2-year yield going nowhere fast. You get a little bit of buying in the back end there. You see the 10-year yield off by about 4 basis points, but you also had an auction. You had a 3, the 10, and the 30. They weren't great. They were kind of meh, particularly that 10-year earlier in the week that kind of turned the market around. And you're looking at what, the 210 spread, disinverted earlier in the week, and now we're back to a little bit of inversion. It feels a little bit like reverting to the old playbook, guys.
Ira Jersey said they were bad. Just so you know, Ira Jersey said the auctions were bad.
Well, did he say kind of 2 of the auctions?
He was talking about yesterday and the day before.
Yeah.
I say, okay, I'm a little bit, I'm gonna couch it a little bit.
You're more optimistic than Ira Jersey, our lead rates analyst.
To be continued. All right, let's go back to one of the stories that Matt and I have been talking about, and I hinted on it earlier with Expedia. But there's a lot of warning signs, if you will, in terms of a lot of the travel players, whether it's hotels, whether it's flights. I thought this was interesting in this story. It talks about this one company, Embark Beyond, and they're a travel advisory firm, and they say that the average trip length is down 14% year over year, averaging 6.2 days rather than 7.8. And even among its deep-pocketed travelers, the word of the year is value, according to the company's co-founder. So people are looking for value when they go to travel, or they're kind of scaling back their travel.
Is that the dog airline, Embark?
Embark Beyond, they're a travel advisor.
There is a dog airline, right? I thought it was interesting that Expedia was up, 12, 13% on the day, even though they came out yesterday with soft bookings, and we had bad news from Airbnb, bad news from TripAdvisor, kind of bad news from Disney parks, and yet
Ryanair
Expedia
has come out too. They're a discount traveler.
Yeah, I mean, but is this a kind of that blip here? And we talk about the performance of those shares on the week here. And I mean, I was kind of surprised by the rebound in Expedia as well as in Booking, but you didn't necessarily see that same rebound, Alex, in those other names. Hilton was still down 13% on the week. Marriott down 10%. A lot of the sort of the traditional hotel lines were really seem to be the ones hit the most.
Yeah, I also wondered too, it was already kind of baked in, right? That Expedia dragged down a little bit because of Airbnb and Booking. So I wonder if that was already there, which is a little bit of a rebound because it wasn't as bad as feared.
All right, you guys, I don't know if you guys have been watching the Olympics. Yes. I know you guys have a lot of TV screens.
Only the
in the radio
breakdancing
booth here. Well, the breakdance is over. The woman from Japan won, Amy. She did a great job here. The men are tomorrow here, and that was fascinating. But this is it, guys. The Olympics wrap up this weekend. I don't know what your favorite moment from this Olympics has been so far, but it's well, there you got it. Simone Biles. How about that?
She's the best. She's the best. But there was a great piece, guys, in the Wall Street Journal that talked about some people from different countries. You don't just get a medal, you get other stuff. And it follows one gentleman, Carlos Yulo, won 2 Olympic gold medals for the Philippines. He doesn't just get the Olympic medal. He gets a congressional medal, at least $350,000 from the government, a free set of headlights, fog lights, free wedding photography, haircuts, furniture. His driveway is repaved with asphalt, and I think he gets a car or something. I mean, that's awesome.
I think a lot of them do. I didn't realize that athletes actually get a lot of other things when they, or some of them do, when they win a medal.
I mean, they struggle through training and a lot of them don't make any money on the way up. So I'm glad they get free fog lights. My favorite moment has to be Djokovic finally getting his Olympic gold. I mean, this adds to, the most wins in majors for any male tennis player, and he finally gets this, he could, I think, happily retire at this point.
Yeah, yeah. Interesting too. I just want to go back to the breakdancing because that's close to my heart, which was the first year. There's a great story in the Bloomberg Terminal about the next Olympics 4 years from now and the new sports that are going to go into that. Football is actually making it in, although it's flag football. But apparently, NFL players will be allowed, at least here in the U.S., will be allowed to vie for to be on the Olympic team.
Here's my question: can you call it football if there's also soccer? Because doesn't everyone but us call it football?
But you're talking
you
about,
play it with your feet?
No, he's talking about American football.
Yeah, I know, but can you call two things football? Because, soccer for the rest of the world, you play with your feet, and then we're doing flag football. Is that going to get confusing? Do we need to rethink this? Is it, I don't know.
No, we should call football, just call it soccer. By the way, remember when I ran into Fab Five Freddy downtown and he knew Romaine?
He did. He did know Romaine.
Everybody knows Romaine, guys. I got stopped in the street talking about Romaine.
What does he think about football versus football? Did I pronounce it right?
Football.
Football?
Football.
Football? All right.
We're going to put that on a loop, Romaine, just so you know. It's going to be with you forever.
You can add it to all my other...
Cannot wait.
Bloopers.
All right.
Have a good weekend, guys. A safe weekend. Enjoy the closing ceremonies of the games. They've been really incredible to watch. All right, that's a wrap. We're cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it Closing the Bell. We will see you again, same time, same place on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody. Well, the trading week may be ending somewhat calmly. It's certainly not how we started. It was just Monday that, as you know, global stocks continue to sell off. Some were making the case for aggressive emergency cuts by the Federal Reserve. That was followed by the biggest rally in almost 2 years. That was just yesterday. Traders pairing bets to about 100 basis points of Fed easing this year. And a big chunk of Bloomberg Wall Street Week tonight is devoted to this week's trade, the bond rally and the Fed reaching its target. And you also had one former president who happens to be running again for the White House saying he should have some say in the setting of Fed monetary policy. Needless to say, David, you had a lot to talk. David Weston, the host of Bloomberg Wall Street Week here in studio. A lot.
Yeah.
Again.
Thanks for having me here. Yeah, we had Larry Summers on, of course, our special contributor. And I have to say, we blew it. We did not ask him about football or football. Actually, I think this has already been decided around the world. It's called American football.
That's what we call American, but it'll be American flag football.
Oh, that's true. That's not really quite football. Right?
No, not very American either.
But so we talked to Larry a fair amount about a tumultuous week, I think it's fair to say, in the markets, despite how they're ending up here on Friday. Quite a wild week. And all that talk, remember Monday when we came in, there's going to be an emergency rate cut, and it was going to be 50 basis points, 75 basis points.
Jerry
Exactly
Siegel
right.
said.
Yeah, and Larry, now she had the benefit of hindsight. It was Friday we were talking to him now, not a Monday. But he said, look, it was always overdone. I mean, people were just getting too excited too quickly.
Blew it off? Very much so.
He said, look, what the Fed should do is it should say, look, we're watching it carefully, and we'll take appropriate action when it appears necessary, and not go out too far over their skis, which, by the way, he thinks the Bank of Japan is doing a little bit right now.
Oh,
we also talked about that.
Yeah.
He said, it's a little bit like learning to drive a car when you start out and you sort of go too far left, too far right. They weren't going to raise it all, then they raised, and then they had a market reaction, and then they went all the way on the other side.
To be fair, for Bank of Japan, this is a new thing for them, right? After a very different environment for a very long time.
It's like learning to drive a car for the first time, at least in a very long time.
I have been relying on you this week to help me navigate the media landscape because we've had so many shocking earnings reports. Well, two big write-downs, right, from Paramount and Discovery.
Warner Brothers Discovery.
Warner Brothers Discovery.
Paramount.
And as someone who used to run a media giant, at least ABC News, what do you think about this?
Well, first of all, it shouldn't be shocking they wrote those assets down. I mean, did anybody have any doubts that they weren't worth what they were 3 years ago, 4 years ago? And frankly, David Zaslav, whom I know well, I worked with him when I was at ABC, and he was at NBC. We were on some boards together and things. He's a very smart guy, but timing is everything, and he bought sort of at the top of the market.
But why do it? Like, it's not like 2 years ago we were starting to talk about.
You mean why borrow $40 billion and buy Warner Brothers from AT&T?
Why buy it to begin with? Oh, because he thought that he could put it all together and have a wonderful big thing. That's the story of media. That's happened again and again and again. Somebody goes out to Hollywood and thinks they're going to take it all over. And listen, David is an entrepreneur. He's a real showman, and he loves this stuff. But but he bought at the exact wrong time. He bought just before Netflix first reported some diminution in subscribers. If you recall, all the streaming stocks went down about a month after he bought, and he also bought when money was free. I mean, the interest rates were essentially zero.
So a deal that might look good then doesn't necessarily
at 5%,
right now.
it looks a lot different from a 0.5%.
Plus,
right?
he's getting a crown jewel of media in HBO, which I feel like he just changed the name to Max out of spite for the people who create content there. Let's talk about Greg Mann.
Wait,
yeah?
what were you going to say?
No, I was going to say a lot of people are questioning the HBO move. I mean, and listen, we can all make mistakes, and we do things that people question.
We all would.
But HBO was a great brand. And to say, I got an idea, let's do away with HBO and call it Max. Yeah. And a lot of consumers, I'm not sure, are going to understand that.
It's like changing the name of Disney Plus to Plus.
Yeah, exactly.
I am always fascinated to hear from Greg Mankiw from Harvard University.
Yeah.
I mean, I think one of the most interesting economists alive right now, and you spoke with him.
I agree, yeah. We talked to him actually out in Aspen. We were out in Aspen. And we had a good discussion about why the economy was doing so well. And he admitted he was surprised. He said a year ago he was predicting a recession. And he said, look, the reason he thinks is because people had more savings than we thought. And in fact, inflation expectations were lower than we thought and were baked in. But he was very concerned about the debt and deficit. He said the next president's got some really big issues in front of them. I think he actually said we're giving a negative bequest to our children. He said you cannot give a negative bequest anywhere other than through the government. You can't actually have your heirs owe money, as opposed to getting anything. And he's very concerned. He thinks somebody's going to have to deal with it.
This is, by the way, this is the first year in which our monthly interest rate expenses eclipsed $100 billion. So we're paying now more than $100 billion a month in interest. We're paying more than $1 trillion a year in interest, and we're spending more on the debt, servicing the debt, than we do on our military.
Yeah. And that's why we have presidential candidates who are talking about this nonstop, right? And we have both candidates saying, let's really cut the debt. Let's go there. I haven't heard a whisper of it.
Which is really shocking, right? If you consider it.
Exactly.
I want to go back to Larry Summers because one of the stories that we had this week, the Google ruling this week, right?
Yes.
And we are increasingly seeing big tech on regulators' radar and making decisions.
And it's become a big issue potentially in the campaign because as you saw, I don't know if you saw or not, we had Reid Hoffman come out and say we got to get rid of Lina Khan. And then we had J.D. Vance, the vice presidential candidate, saying, oh, no, I think she's really good. Let's keep her in, exactly where she's going to be.
Amazing.
And so Larry actually had some things to say, as he had in the past about Lina Khan. He says, look, I understand why you don't want things to be too big, but you should have a reason for cutting him. This is what he had to say.
I think that Lina Khan, in so many of her statements, has tried to go way beyond that to some broader populist theory of antitrust. And I think that is a real mistake. And if we start just going after big winners because they've been big winners and practicing the economics of envy, we're going to do a lot of damage to our economy.
Now, this is a Chicago school sort of approach.
I think that Lina Khan
Oh, they're playing this out again? No.
No, I think it just started again. Anyway.
But I mean, this is obviously more of a Chicago school of economics point of view. But I must say, as somebody who used to practice antitrust law, I have some sympathy in this sense. I understand why you want to say we want to go past Chicago school. We should go past just the price of consumer. But what's the alternative? To just say too big, who decides too big? Is there any way of analyzing that question? Otherwise, you just end up with judges sort of using their gut to say, I think that's too big a company. That's
By the way, that's an interesting point because I noted when we talked to Jennifer Rhee about what the Google ruling will actually mean, and she said, and on the one hand, it's going to mean they won't be able to pay Apple $20 billion a year in order for sort of exclusive promotion of their search engine. On the other hand, consumers aren't going to use any other search engine.
Yeah. Well, and let's bear in mind, monopolization has never been illegal in the United States. Having a monopoly is not illegal.
Yeah.
Using special means to maintain or gain a monopoly is what's illegal, and that's what happened here with their contract with Apple, where they were paying a lot of money to have a special position on Apple. That's what the issue is. It's the conduct of monopolists. Nobody's ever said that, in part because the courts have always said, look, you shouldn't have to compete to get bigger and more successful, and then once you get big and successful, we penalize you for it.
Right.
If you're just doing well, you have a good product that people want to buy, why are we going to penalize you for that?
Right. What's the message that's being sent if you do that?
Yeah.
Good stuff, as always. David, thank you so much.
This has to be the most consequential week for Wall Street Week, at least one of them, since you've taken over the brand.
It's a big one, no question about it. And that's before we get to Michelle Flournoy and what we're doing with the defense budget.
Yes.
We also talked to her about that.
Smaller than the interest rate service and costs.
It is now.
Which is just staggering. All right, David, thank you so much. David Weston, host of Bloomberg Wall Street Week. It's coming your way at 6 p.m. Eastern right here on Bloomberg Radio and Bloomberg Television. You're listening and watching Bloomberg Radio.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. It turned out to be a losing week. Little changed at the end of a volatile week. For the week, the S&P 500 index was down 0.04%, but that is 4 losing weeks in a row. Today, we did see the Dow, the S&P, NASDAQ all advancing. S&P 500 index today up 24 points, a gain of 0.5%. The S&P now at 53.44. Dow Industrials up 51 today, advancing by 0.1%. NASDAQ up 85, up by 0.5%. Bottom line update, light volume 10-year yield 3.93%, the 2-year 4.05%. Spot gold up 0.1%, 24.30 the ounce, while West Texas Intermediate crude oil was up 1%, 76.94 a barrel on WTI. Big day for Sweetgreen. That is the salad chain. After earnings, Sweetgreen today surged 33.4%. It posted sales that outpaced market expectations. It raised its outlook for the full year. So again, Sweetgreen today, sweet day there, up by 33.4%. Recapping stocks higher. S&P up 24, a gain of 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet there with an update on some of your top business stories. Well, we're going to switch gears a little bit. Alzheimer's. The disease is among the world's most pressing healthcare challenges, affecting more than 6.9 million people in the United States and 40 million globally, numbers that are expected to double by 2040. Meantime, dementia is the 7th leading global cause of death among older people, and the number of people affected is expected to almost triple by 2050, with annual costs upwards of $1 trillion. We all probably know someone, often family members, friends, who have had to deal with one or the other. So we're going to dig into this with Dr. Ian Lustbader, back with us. His clinical professor of medicine at NYU Langone Medical Center, joining us right here in our studio. So good to have you back. We were just saying over a year or so, right, that you've been in the studio.
We've done some Zoom.
You've done a lot of Zoom
interviews, but yeah, COVID kind of separated everybody, but it's nice to be back in studio. Everyone looks great.
I don't know if I've told you this, but I studied at Tübingen University in Germany, which is where Alzheimer did his research and did his work. So there's that connection. Also, my father, unfortunately, has Alzheimer's. And so I have a million questions for you about this. I find one of the biggest problems in terms of treatment is getting the patient, who is almost always, a responsible adult with his own sort of legal autonomy, is getting the patient to accept the diagnosis and start to move towards treatment, because my dad for years has denied that there's anything wrong with him and doesn't remember, last month when the doctor told him he has Alzheimer's.
Because the onset can be slow and insidious, patients really are often in some denial about what's happening, although family members may be worried. But you're exactly right that typically as people get older, often they have normal signs of aging, which may be memory issues, but dementia, which is sort of a group, a syndrome of a number of different diseases like
Trading? Don't settle for the basics. Trade with a plus at Plus 500. Plus 500 may be the place for you to trade CFDs on thousands of instruments, including stocks, commodities, indices, and more. Plus now, with Plus Insights, you can stay on top of Plus 500's most up-to-date trading trends. Just tap Plus Insights and discover which of Plus 500's instruments are the most traded, plus the most viewed.
We've got passion, we've got determination, and if we set our sights on something, you better believe it's happening.
We always felt like our content was all about entertainment and being fun, but there was also this, sort of professional business side. One of the things that we knew was basically essential was getting our own website, so people would actually see a proper official group who mean business and who can deliver. And we always had this vision of bringing things into existence that previously had never been seen.
This is the world's largest act.
We bounced a plane boat and a car, and like, it was wild. So today, How Ridiculous have 50 million followers. We're in the billions of views. Tens of billions. That's pretty good. I don't know all the things that we're going to get to do in the next year or 5 years, but if we can do this as a job, anything's possible.
Do you know what's really fun? Making a website on Wix.
Collaboration is key for team success. With ClickUp, you can easily manage your team's tasks and timelines in one app. Using our Gantt chart feature, you can map out your team's tasks and set dependencies to ensure everyone is on the same page. Adjust timelines, change colors, and add more tasks as your project progresses. ClickUp's Gantt chart feature makes project management a breeze, so you can focus on what really matters, collaborating with your team to achieve your goals. Say goodbye to multiple apps and hello to seamless team collaboration with ClickUp. Get started today.
Diagnosis, but there are many things that are simple. Lifestyle change, blood pressure control, weight control, cholesterol control. The Lancet study showed lowering the LDL, stopping smoking, weight reduction, exercise, and working later, keeping your brain engaged. So a lot of people, and we know that
Charlie Munger was at least
exactly
you know, fit as a fiddle in the brain until the very end. I think he was 99 or 100 when he died. Warren Buffett obviously is in fantastic shape cognitively, and he's 93 years old. So I mean, we have a lot of guests I can think of who come on Bloomberg Television, Bloomberg Radio in their 90s, and they still can run circles around me.
That's true.
No problem.
Is genetics?
Yes. So definitely we see families and genetic issues that play a role. Lifestyle can play a role. And we talked about obesity, blood pressure, vascular issues. Where you live plays a role. Your sex plays a role, slightly more common in women. Air pollution. There's a host of different associations, let's put it that way, that seem to be modifiable. But the underlying sort of cause, why, for example, in Alzheimer's, do we see this tau protein? You know, why are we seeing these actual brain changes?
Right.
The baseline cause of that isn't clear, but there are many associations that clearly slow things down a little bit. And there are otherwise healthy lifestyle changes that should be considered. And certainly people should see a neurologist. Often the primary care doc may say, well, you're exaggerating. It doesn't hurt to see a neurologist, get some studies to make sure there are no simple treatable causes like, you know, an underactive thyroid.
Well, I have to say I've heard something a little contrary to that recently with another patient whose diagnosis I follow in Canada. His neurologist was much more concerned about sort of the theoretical study of what was going on with him, and not as concerned with necessarily fixing the lifestyle issues that he had. It wasn't until he saw a psychiatrist, and this is an Alzheimer's patient I'm talking about, that he was prescribed drugs that really helped him live a slightly better life.
Right.
There are
we do see one personality change, psychiatric issues, agitation, confusion, inappropriate speech and behavior can be seen in a variety of these dementias. And some of the pills, you know, like you mentioned, donepezil or Aricept.
Aricept is one
and others, you know, can certainly slow things down, slow the decline, reverse and cure that we do not have yet. And that's the big, you know, $1 billion or $1 trillion, because as we age and more people, as you say, 6.9 million, probably going to get much higher as we get older, but it's the other costs, right? Who's going to care for people? Nursing homes, people can't care for themselves. They become really very dependent, and we don't have the resources to care for them.
Do you ever think about the GLP-1 drugs in terms of that seem to be the miracle cure for everything, but if it, you know, we are finding out that losing weight and being healthier, like obviously this leads to so many other health benefits. It's rather basic, but here we are.
Right. I'm not aware of any specific studies, but for sure we see lower cardiovascular risk outcomes. The GLPs are great for weight. There are some obvious, risks and complications, but it definitely helps diabetes. It helps weight, cardiovascular outcomes, and may well reduce dementia. Dementia is sort of usually a somewhat slow process. So I think we need more studies for that. But you'll have people argue against GLPs too.
I do feel like the pharmaceutical company is kind of the holy grail of finding something for Alzheimer's or dementia. But is it likely that we will find something that once it's diagnosed, you slow it, prevent? I don't know.
I think we have so much concern about it that there's a big effort in research, NIH, and the drug companies who have deep pockets are motivated to really have a breakthrough. So they're doing a lot of studies, and there are some encouraging results, but there are no, at this point, amazing breakthroughs like, wow, this has made a big, big difference. Probably in part because there are many causes, and we're really looking more at the outcome, which is these neurofibrillary and tau deposition in the brain, but the underlying reason why that happens is not yet clear.
Do you have any other questions?
I have a lot more. My mom sent me a whole list of questions. I'm going to ask them during the commercial break.
No, okay, we have to run. Always good. Come back
pleasure.
soon.
Thanks so much.
Yeah, always feel like we learn a lot. It's just information that all of us can use. Be well. Have a great weekend. Look forward to next time. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center, who I know Matt is like just getting his questions and getting ready for Mom to do it. All right, you are listening and watching Bloomberg Business Week. When we come back, we're going to get into what is an easily accessible cocktail, which is maybe the way we need to wrap up this week after all that we've been through. Right now, though, to World and National News and Amy Moore. She's in D.C. Amy, take it away.
Thank you, Carol. President Biden has lifted a ban on the sale of offensive weapons to Saudi Arabia. The decision removes limits that Biden had imposed early in his administration to pressure Riyadh to wind down its war against Houthi rebels in Yemen. The U.S. is looking to boost ties with a key regional partner amid escalating tensions with Iran. The U.S., along with Qatar and Egypt, are calling for new rounds of ceasefire talks between Israel and Hamas this Thursday. We get more from Bloomberg's Jumana Bersecci in Dubai.
Very strongly worded statement saying it is time immediately to put an end to the long-standing suffering of the people of the Gaza Strip, as well as the hostages and their families. It is time to finalize a ceasefire agreement and release the hostages and detainees. They also add that it is only the details of carrying out a ceasefire that remain to be negotiated.
Bloomberg's Jumana Bersecci reports that Israel is planning to send a delegation to those talks next week. Flood warnings and watches stretch from Georgia to New Hampshire, and heavy rain warnings in Ontario, Quebec, and New Brunswick. Post-tropical cyclone Debbie tracking across the eastern U.S. Bloomberg meteorologist Rob Carolyn tells us that once Debbie is out of here, it'll be a really nice weekend.
Debbie is riding up ahead of a cold front, and as it's converted into a low-pressure system, it's going to take that front, grab it, and sweep it through the northeast. So the rain in Maine exits by early afternoon. It turns sunny, and it's gorgeous on Sunday.
Debbie came ashore in Florida as a hurricane on Monday and has killed at least 7 people, pushing more than 100 rivers into flood stage. The Summer Games in Paris are wrapping up this weekend. The U.S. leads with the number of medals at 111. China has 82. Great Britain has 57. And the U.S. and China are now tied for the most gold medals with 33. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story headline right off the Bloomberg Professional Service. Hawaiian Electric sees a $1.7 billion loss from the Maui Fire Pact. Hawaiian Electric will pay those fire claims in 4 equal installments. Also developing story, a headline from the Bloomberg Professional Service. The activist investor Starboard Value now has a stake in Starbucks, that according to the Wall Street Journal. Turned out to be a losing week for the U.S. stock market. Little changed on the week, yes, but still the 4th declining week in a row on the S&P. Today it was an up Friday. A rebound in stocks in the final stretch of a wild week drove the market to its biggest back-to-back advance in 2024. S&P today up 24 points, a gain of 0.5%. So the S&P heads into the weekend at 53.44. The Dow up 51, a gain of 0.1%. Nasdaq Composite Index up 85, a gain of 0.5%. 10-year yield 3.93%. The 2-year 4.05%. Gold up $3 the ounce, up 0.1%. And West Texas Intermediate crude oil higher by 1%. Well, as for the economic backdrop, Anastasia Amorosa is chief investment strategist at iCapital.
We're sort of within the strike zone of, getting close to pricing in the recession based on what we know today. But especially if we avert a recession, buying within the strike zone between a 100-day and a 200-day moving average, that seems reasonable. Anastasia Amoroso of iCapital. So again, recapping, an up Friday, S&P advanced by 24 points, up 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, everybody. I've been thinking about this from the moment I got up this morning at 4 a.m., just because I knew it was going to be a long day in what's been a long week.
Yes, it has been an incredibly long week, and I
happy to
understand that you need a drink after this.
Do you remember Mike Schneider?
Yes, of course.
He used to say it's 5 o'clock somewhere, always.
Yeah, always 5. I think he probably stole that from Jimmy Buffett.
He did, who he loved. All right, one of the trends we are increasingly seeing from startups and the establishment alike is pre-made cocktails, easy to buy, no shaking, no stirring necessary. And that brings us to Aldo Geloso, who runs the second generation of the family-owned Geloso group of companies. They include Geloso Beverage Group USA. He joins us here in studio. Happy Friday. Welcome, welcome.
Thank you for having me.
It's great to have you here. Tell us about yourself and tell us about your company.
Well, we're a family-owned business. Immigrant parents, immigrated in 1957, came here for a better life. We're from the south of Italy. Yeah. And basically my father ventured into importing grapes from California because in Canada you have liquor boards, and my father realized that in Quebec you only drink beer, and he said, we don't drink beer as Italians. So basically there was no wines to be had, and the wines that were available were very expensive, and being a farmer, he said, you know what, let me bring in grapes for the immigrant community, and then that's the story.
So he brought in grapes to make your own wine in Quebec.
For immigrants, exactly. So, because, we're a legislative state, so there's a lot of taxation.
Right.
It's not free market like it is here in the U.S., so...
Even here, we're not quite as free as we'd like it to be, but yes.
Well, freer, but I agree with you. So, yeah, so that's how we started, and basically from there it went on, and when people started hearing about my father making wine, he was never really making wine, he was crushing grapes, and the must, people would be bringing it home to ferment it, and the local authorities got wind of this and said, hey, this man is bootlegging. He's actually making wine. We're in control of the wine industry in Quebec. And they sequestered all the liquids that were in my father's warehouse, and the liquids were then juice. Then 6 months later, my father's lawyer contacts him, says, by the way, Mr. Geloso, you know what? You're going to be charged with bootlegging. He goes, what? You know what? They did a test and it's wine. He goes, but naturally, it's going to ferment. We'll turn it to wine. So basically, my father brought in an enologist from Europe, and my father won the case, and the lawyer asked my father, listen, now's the time to sue the government. My father said, I came here as an immigrant for a better life. I want them to give me a wine permit. That's why our family has the first wine permit in Quebec 001.
Wow. That's a
what
great
a story.
Yeah. So tell us about what you got, what it's grown into.
You've turned this into a company that does, do you deal with beer now as well?
We deal with beer. We deal with cider. We deal with spirits. We represent Bacardi. We represent Boston Beer in Quebec. Basically, we are a one-stop shop.
And this is like one of the hottest growing areas of the alcoholic beverage segment, right? I mean, everything from the lowest level to, I mean, there's really uppity pre-mixed cocktails that you can order at a restaurant.
What you have to realize is that whenever you're drinking a cocktail at a restaurant, you'll never find unisons in taste. Somebody will add 1 more ounce of cognac, 1 more ounce of vodka. So what we ventured out was basically creating a malt. Why malt? Because malt gives us access to people, to markets, whereby spirits you're limited in general. So we actually patented a process whereby we clean the malt and we add the proper salts, the proper sugar levels, so that at the end of the day, you can receive the natural flavors of whatever cocktail you want to build on. And what you have here, cocktails being the first original cocktail, and Sonny Margarita is the #1 selling cocktail in the US of A.
Wow.
It beats out every other cocktail. And this from Quebec. Could you believe that?
It's pretty cool stuff. It's a crowded market, though, increasingly. How do you get yourself noticed, or how do you think about that? Because it feels like we talk to a lot of folks in the beverage and the alcoholic space, or alcohol space, I should say.
Alcoholic space?
Yes.
It's a Freudian slip there, Carol.
Like I said, it's Friday. In the alcohol space. And I just feel like there's a lot of startups, there's a lot of the establishment that are coming out with different brands. So how do you distinguish yourself or get noticed?
You need agility, you need flexibility. You have to address not what the consumer wants, what you believe they want. One of the things that we pride ourselves is having the proper contacts with distributors, because like you said, Carol, there are so many people out there wanting to load up the warehouses of all these distributors, whereby at the end of the day, you saw it in the craft beer business, whereby everybody got on board and everybody got stinged by it because the craft beer business somehow sued, right?
Yeah.
So what we've done is we provide proper quantities, we provide constant updates and flavor profiles, but at the same time, we are authentic in terms of flavor. There is no unnatural ingredients. And what we do is
I'm going to open as you're talking.
Okay, that's the Sonny Margarita. You're going to enjoy.
It sounds like a beer, guys. It's not.
It's not a beer. Like, you know what? At the beginning, everybody used to tell me, by the way, it's malt. I go, tell me something. Do you like scotch? Scotch is malt. So you have to get the people to understand that it's only the alcohol stream that gives you access to a network. So it tastes exactly like spirits because we redesigned it as spirits.
All right, Carol is taking a sip now. You've poured it into...
Sunny Margarita.
And?
It's nice.
It has a hint of salt.
And I'm picky about margaritas.
It does have a hint of salt. That's an important part. So I haven't had a drink.
I'm not going to put it near you.
I haven't had a drink in 2 years. Yesterday was my 2-year anniversary.
Congratulations.
But when I did drink alcohol, I loved the salt in a margarita.
In a margarita, right?
Yeah.
That's incredible. What does this cost?
In retail?
Yeah.
That's a good question. $2.99. I have no idea. Now I look ignorant.
Wait, do I have to go to your website? No, I don't know.
It's like a.
I would say a thing $1.99.
Sorry, I didn't mean to do that to
a
you.
22 ounce. It's a 22 ounce can, so it's like a tall boy, right?
What do you think? Because I think about when you go to a bar, right? Like a margarita is
like $10, $12 probably.
$15, yeah, depending on.
Do you make an alcohol-free version, or do you make alcohol-free cocktails as well?
We are the biggest producers of non-alcoholic beverages. We started in 1989 with wine coolers, and what you have to realize, we have brands that are non-alcoholic because the demographics, the population is aging, better lifestyle. I say between now and 2050, 50% of the people won't be drinking alcohol.
Right. Well, and weed also. People like to smoke weed instead.
Back home, it's legal.
Yeah.
And everybody was trying to convince everybody to get into beverages on weed, but you know what? It's not taking off.
No, it hasn't. All right.
Stick around. We actually have done statistics. Bloomberg has done a lot of reporting on the non-alcoholic area and said that sales of non-alcoholic spirits are poised to grow at 5 times the rate of conventional ones. Do not go anywhere. We're going to come back with Aldo Geloso. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with an update, an important update for the remnants of Hurricane Debbie. New York Governor Kathy Hochul has declared a state of emergency for all of New York State because of remnants from Hurricane Debbie, what's left of the hurricane that are forecast to impact the region. Starbucks shares up 3% after hours after the Wall Street Journal reported that activist investor Starboard Value has taken a stake. The report cites people familiar with the matter. Hawaiian Electric says losses resulting from estimated liabilities stemming from one of the worst wildfires in U.S. history are seen at $1.7 billion. Hawaiian has also issued a going concern warning. Stellantis, the owner of the Jeep and Ram brands, plans to eliminate as many as 2,400 hourly positions at a pickup truck factory located near Detroit. Some of the other stories that we're following. Day 2 on the job for Boeing CEO Kelly Ortberg. Yesterday, he walked the main factory floor near Seattle on his first day. He's also relocating to the city that forms the nucleus of the plane maker's activities. So what's on the top of his agenda? George Ferguson covers aerospace for Bloomberg Intelligence.
It's really about improving quality in their factories. I think that's number one, so that they can start to up throughput, improve cash flow, improve their perception of quality with their customers. And I think it's getting back to a strong engineering culture.
George Ferguson of Bloomberg Intelligence. And on an update for the rest of the stock market, Boeing shares did decline today. We saw Boeing down by 0.6%. Boeing ending the week at 167.91. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we are finally getting ready to wrap up on this Friday. I feel like I've been counting down all day just because it's been that kind of a day, that kind of a week. Carol Messer, Matt Miller. Matt, of course, in for Tim Stenevec on this Friday. We want to get back to our guest, Aldo Geloso. As we said, running the family-owned Geloso group of companies that includes the Geloso Beverage Group USA, still with us in our studio. Aldo, I do wonder, Matt brought up a great point about how a lot of people don't want any alcohol anymore. There's that trend. There's also a wellness, healthier trend. No sugars, that kind of thing. That's a real concern for a lot of individuals. Kombucha. How are you thinking about that in terms of how you guys do things?
Well,
are you seeing that and kind of adapting as a result?
I mean, when you see players like Molson Coors change their name to the Molson Coors Beverage Company, they're starting to realize they have to walk away from beer, so certain staple items. So you have non-alcoholic was always considered 0.5. Because of the changing demographics now, everybody's focusing on 0.0 because we have to attend certain other demographics or religious beliefs going forward because the population is changing. And the wellness, I mean, there's hydration, there's longevity. You have to address it today, and how we do it also in non-alcoholic is that we started in the 80s for the simple reason that we knew that people need an alternative. And children, to make sure that children don't drink, they have to have products that are non-alcoholic with a name that is alcoholic. So it takes that stigma away from them and that pressure, because peer pressure is very strong. So we have non-alcoholic champagnes, non-alcoholic cocktails. And when you look at margarita,
guys offer that,
we offer that range across the board.
Have you seen a lot of growth in that area?
So much. And especially when you see big players themselves like Heineken, Budweiser, and everybody,
What about for something like this, where I think, I've actually, been either on a vacation or I sail, and there's not a lot of, we don't keep a lot of stuff on the, there, and I've picked up these pre-made cocktails, and it's really nice and convenient. So I am curious, what kind of growth are you seeing in this area?
Well, we have grown double-digit.
Or ready to drink,
Last 6 years, every month, we control the category in terms of margarita. We're the third largest in America, and we still, our runway is still there because, it's like at the end of the day, we're fighting big boys. And like Matt was saying, what makes us pertinent is the fact that we keep our ear with the distributor. We attend to their needs in terms of inventory levels. And at the end of the day, people only come back for only one simple reason: quaffability. It has to taste good.
Yeah, I agree.
People will adopt it once, but they have to come
I've had
back.
some non-alcoholic stuff, and I have to be honest with you, I didn't like it.
That's probably beer, right? Non-alcoholic beer and wine is no bueno, right?
Yeah.
But you can easily make a non-alcoholic sex on the beach, you know, because these cocktails, I'm looking through what you got. Carol's drinking the margarita. You got the screwdriver, obviously.
Yeah.
You've got Alabama Slammer.
Sex on the beach.
Yes, Sex on the Beach, the Long Island iced tea. Most of these cocktails were mixed originally so that you couldn't taste the alcohol in them, and I imagine that makes it easy to make non-alcoholic versions. How important is your distributor relationship? I mean, you must get all your intel that way.
Got to be quick